Hi, it's Tuesday, July 12th, 2016. Maneko64 here, home of alternative economics and contrarian views. I like to talk about hyperinflation. And hyperinflation basically is a loss of confidence in the currency. Basically, it means, consumers, investors, the population at large in that country or countries, they lose confidence in the central bank and the paper currency, and they rush, to get rid of that currency by selling it and buying goods, real things, productive assets, buildings, anything that has value because they're losing confidence in the currency. So I personally think that right now we could be in that stage where investors are investors, they're the first ones, in my opinion, to lose confidence, and they start moving their cash or paper, into productive assets, real goods, precious metals, silver. And a lot of people think that you can't, hyperinflation is caused by too much demand of goods and services. In a way it is, but not because people want to consume it. Right now, if you look at all the major economies in the world, you have the US economy. Yes, we had a good jobs number on Friday, but over 100 million Americans are not in the labor force, and they can't work, and they are, within working age. There's 47 million or so on food stamps. The budget deficit is still there. The national debt is rising very quickly. We're almost up to 20 trillion. GDP is about 17 trillion. In the UK as well, we are supposed to have a balanced budget by this year already, but now we've been told that we're going to have to wait at least to 2020. So our national debt is going through the roof as well. It's about 1.6 trillion pounds. It's yeah, and our GDP is around the same, 1.7, 1.8. And there's another 500 billion that they're not counting in that national debt in the UK, because that was a guarantee to help save the banks in '08. And now they're probably gonna, Bank of England announced another 250 billion. And the reason the deficit's still there is because even though we're told that the economy is doing well, all the jobs that are being created are like part-time jobs, 0-hour contract jobs, and these jobs don't give you a full contract that give you benefits, and these people are not paying the national insurance tax, which is the payroll tax. So yeah, the government is getting no receipts. What else? Europe, Italian banks are on the brink of collapse. Deutsche Bank is on the brink. Deutsche Bank, an economist at Deutsche Bank even said the EU needed to bring out 150 billion euros to bail them out. So what I'm trying to say here, we have insurmountable debts all around the world, especially United States, UK, Japan. The Japanese government debt is over 200% of GDP. And it looks like Japan is going to start doing helicopter money, as I've talked recently about. And now I go back to the 1920s, because that's the last time we had hyperinflation in the major Western countries. And if you look at the stock market during Weimar, and I'm looking here, you can see in this chart, in US dollar terms and in mark, Reichsmark it was called at the time, I think, yeah, the Weimar mark. And notice that, like, from January 1920 to around 1922, after the summer of 1922, the stock market in marks was pretty steady, just below the 1,000 level. In US dollars, it rose in the beginning of 1920 to around, it was just above 20, and then it drifted lower, and it was still just below 20, in the beginning of 1922, and then you can see a drop to below 10 just at the end of 1922. That's in US dollars terms. While in mark terms, it started actually rising, and it rose to 100 billion marks, as you can see. That's from under 1,000, and it rose to 100 billion marks by the end of 1923. In US dollars terms, it rose to $40 from just from around 5, and then it settled at the end of the chart, as you can see, below 30. So this was during the German hyperinflation, where the mark was basically annihilated, destroyed. But as you can see, if you'd invested in the German stock market, you actually wouldn't have done too badly. You would actually have protected your wealth, even in US dollars. But in Reichsmark, the mark was worthless. So, if you kept banknotes, you would have been finished. But in the stock market, you've been all right, because you would have bought hard assets and productive assets by buying companies, that have factories, mining companies. That's what happened. So what I'm trying to say now is that, yes, our stock, the stock markets are making all-time highs here. S&P 500 closed at an all-time high yesterday, and this morning, as I speak, 10 a.m. London, the S&P is up another 10 points at 2146, an all-time high. The Dow hasn't broken through the all-time high, but is very close to it. It's at 18,312, up 89. And the FTSE has done well. A lot of people are noting how the FTSE in a bull market, but, after the Brexit, but people forget that the pound has dropped, 12, 15%. So is the FTSE doing really well in dollars or in gold? So what I'm trying to say here is that, yes, the stock market is going up very nicely here, but I feel that investors are losing faith in the central banks, and that this is not a good signal. Usually a rising stock market is a signal of a healthy financial system and economy and currency. But as you saw earlier, in Weimar, Germany, it wasn't. And so I'm not saying that being the stock market is wrong, and it could protect you, but it's also signaling that we could have hyperinflation, which means a loss of faith in the currency. And the reason the Germans lost faith in the currency is because, they had in World War I, where the German government financed the war through loans, and then they had the reparations they had to pay. So the amount of debt they had to pay was insurmountable. It was like, by 1923, investors realized they'd never be able to pay back that debt. So that's why the hyperinflation started, because the people lost confidence in the government and the central bank's ability to finance that debt. And now, after 8 years of, giving central banks and governments the benefit of the doubt, I think investors are starting to realize that there's no way out of all the debt that was created in the last 8 years to save the financial system. And that's what I'm seeing. So hopefully I'm wrong, but if I'm wrong, I'd expect the stock market to make this breakout that it has to all-time highs, but then turn around sharply. So you could say it's a false breakout, but if we keep going higher and the Dow is at 19,000, in a month's time, all bets are off of stability and financial health. So yeah, that's what I'm seeing right now. It's difficult. You know, the only thing that I could say is that, yeah, maybe do buy some stocks of productive companies and productive assets, like mining, railroads, or, you know, factory companies that are in manufacturing. But also hold on to, be your own central bank and have your own, you know, hard currency reserves like gold and silver. And so if you enjoy this video and my analysis, please like, share, and subscribe. Take care. Bye.